thanks so much for joining in on ET Now. Congratulations on acquiring these brands. Up until now, Everyouth, Neutralite, these were forming a small pie for the group. But I guess it's only going to get expanded with this acquisition.
Thank you very much. Yes, as you rightly said, with the acquisition of Kraft Heinz, we are able to catapult Zydus Wellness revenue by 3 times to 1,700 crores, and which is going to have 7 brands, where 5 out of the 7 brands are leading brands in the category. The Kraft Heinz portfolio, led by Glucon-D, Complan, and Nycil, and followed by Sampriti, have strong heritage brands which have created strong value and a very scaled and profitable brands for the company. And with the addition of Zydus Wellness, it brings in great synergy for the company, both in terms of distribution, logistics, and also the brand equity, where 5 of the 7 brands are strong market leaders.
Dr. Patel also just wanted to understand that the focus of Zydus has been on niche product. It's been on very differentiated products. Maybe some of them also in a lot of premium category. What does this portfolio get? Does this also mark a change in the strategy? You will look at various other mass products as well from now on?
If you look at the legacy of the acquired portfolio, there's a strong pharma legacy that is associated with many of these brands. These are very strong science-driven brands which are for solution-oriented brands, and I think that is what we as Zydus Wellness and Cadila Healthcare have been doing for years. So it brings in a great synergy of science, pharmaceuticals, and the legacy that we have, and we would definitely be able to scale up with new introductions and bring more solution-oriented products through line extension.
Right. Can you just talk to us about the share purchase agreement as well? What will be the contribution of Cadila Healthcare? What will be the contribution of Zydus? How do you plan to fund this?
So it's a 100% acquisition of shares of Heinz India Limited. The deal will be consummated through Zydus Wellness with a mix of debt and equity. Zydus Wellness will borrow a certain amount of debt. We will have PE players also coming into the company and some structure. It has cash reserves of about 500 plus crores, and there will be a small equity infusion by the parent of up to 1,000 crores.
Right. That is Cadila Healthcare, right? Mr. Patel, that is Cadila Healthcare, right?
Yes, it is Cadila Healthcare Limited.
Okay, so Cadila will invest about 2,000 crores into the company. Let's just talk.
Not 2,000 crores, around 1,000 crores.
Around 1,000 crores. Okay.
Yes.
Cadila will invest close to around 1,000 crores in the company. Just wanted to understand, Mr. Patel, that where do you see the growth coming in with these brands? Now, if I look at the acquisition, it gives you a big jump. It gives you a big jump in distribution. It gives you a big jump in the sort of offering that you have. It will give you a big jump as far as the marketing is concerned of all these brands put together is concerned. When do you expect operating leverage benefits to start coming with such huge scale?
So I think for the immediate basis, for the next near term, we are going to make sure that we run the businesses independently, because there is enough growth potential we observe for both of the businesses. So they will be run separately, with certain synergies to be baked in terms of distribution and in terms of logistics. Longer term, obviously, there are more synergies that one can look at once we are able to successfully integrate this business. We see definitely synergies on the cost side, which we can, on the material side and other things which we will have. But more importantly, it is the last 6 months for the business has been good and is tracking well with the right communication going through. So once we're able to position these brands more appropriately, bring in value-added products and scale up these businesses, I think there is tremendous potential for all of the 3 brands there, because they have strong brand recall. All 3 brands have about 90 to 98% brand recall. They are leaders in the category, many of them. And so we will be able to expand this, because the penetrations are still lower. So the rural expansion and all of those things will help rejuvenate these brands.
Dr. Patel, can you talk about the valuations as well for a bit? What is the valuation? If I look at the sales numbers that I have versus the value that you're paying, it's less than about 2.8 times. Does the company have any debt, any other valuation parameter that you've looked at?
It doesn't have any debt. The multiples are about 20 times EBITDA. the valuation.
What you have acquired at. Also,
Yes.
you know, you
so
could
it has an EBITDA of 225 crores.
EBITDA of 225 crores. So that's the
July.
correct way to look at it.
Yes.
Right. Can you just talk about the space that you are entering in with the health drink? It's interesting. GSK is also up selling its portfolio. You have done this big acquisition. Is that the space where you expect a lot more money to be spent and a lot more growth to come in by the industry?
Yes, I think with this acquisition, our health nutrition segment, health nutrition food segment, we are about 80% of the total revenue for the combined entity. So we will significantly play in this segment, which has generally higher margins and better profitability.
Okay, Dr. Patel, you spoke about higher margins. What margins are we looking at roughly, and vis-a-vis what your current brand of portfolios, your current brand of consumer portfolio rather has, what would these acquired brands carry in terms of margins?
Combined business will have an EBITDA margins of upwards of 20%.
20%. Okay, that seems pretty encouraging. All right, Dr. Patel, we leave it at that. Thank you so much for joining in. Congratulations once again on this deal. We wish you good luck as you integrate these portfolios and mark them with the Zydus.